This is our fourth blog video for May 23rd, 2012. I'm doing a lot of testing on the new version and therefore didn't leave it running overnight. One of the new features of our soon-to-be released version allows you to have a quote sheet or hot list with either a currency pair or, in this case, the individual currency, just the yen, just the dollar, just the New Zealand, and sort it. And when you do, right now I have it sorted from strongest to weakest, and you can also auto sort every 10 seconds, 15, 30 seconds, minute, 5 minutes, whatever. And it will always show you the strongest one, second, third, fourth, fifth. And the way we did this feature's been in our software for years. However, some of our tools are real-time only. They don't work historically, and our range bars take way too long to download the tick data. So what we do is we right-click on the chart here, and you can see Set Chart Group Option to A. And what we're doing is setting up blank placeholder charts where it shows the first symbol, and then it is linked to another chart that has the same color, which is red in this case, and chart group A. And that way, when I sort these, it automatically snaps into place. See that? No matter what size it is, too, by the way. Doesn't matter how big the original one is. It automatically snaps into this place and into the right size. As you can see, the yen just extended it, fit perfectly over top of the placeholder chart. Not only does this make using your currency meter better and easier and more intuitive than ever, but it also allows you to have a list of your favorite currencies, and you can sort them, and the strongest ones are on top, the weakest ones are on the bottom. And then on one monitor, for example, show the top 3, 4, or 5 strongest currencies in the correct order, and on another monitor, show the weakest ones. You would, if you have 12 currencies, for instance, you would have, the chart reference symbol number 1, 2, 3, 4, and then for the weakest ones, you would, if there's 12, you would have number 12 position show up on the top of your weak monitor, then 11, then 10, then 9. Very simple, intuitive, and obvious. This is our currency meter that shows both live and historical values. Because I didn't leave the software running overnight, I'm going to use this currency meter for today's class instead. And basically you want to look for extreme signs of strength, like in the dollar and the yen, where the daily, weekly, and monthly trend that's underneath it with a color strip is also up. You want to buy those versus some of the weakest, which is the euro. All the time frames are down. The peaks of intensity are the downside, especially after 9:30. Same thing here with the Swiss, pretty much down on all time frames, and also the Australian. The New Zealand also has a very strong daily, weekly, and monthly trend down, but it's showing mostly, strength on the way up. Because the longer time frame trends down, if you see some weakness come in, most of the time you're going to have weakness for an hour to 3 hours. In this case, it was only an hour, then some strength came back in. And that's why it's usually a better idea to focus on the ones that are just as clear as can be, all, weakness, and the Swiss as well. So you want to sell the euro dollar and the euro Swiss. I'm sorry, the euro dollar and the euro yen. Here's the euro dollar. And you can see after 9:30, just down, down, down. Notice it found a little bit of support at the first Fibonacci profit target, went down to the second one, and got a nice little 25 pip bounce off of it, and then continued, on down again. Most of us prefer range bars because they're a lot clearer. If you missed this first down move right here, there's a little pause in the trend, allows you to get short when it breaks the previous week's low, which is support, and you got that nice little 40 to 60 pip drop. You can also look for 3 and 4 bar counter trend moves up. First bar that goes red, you go short, and you follow it down. Now when I leave this live, we have our excellent momentum-based trailing stops, but they only work live. Just like the build your own trend only works live. There's no way to line up multiple time frame data using multiple different statistical tools, some measuring the direction of the euro versus every other pair, and the dollar versus every other pair, and some of the tools measure the intensity of the direction. So in other words, when the euro is going down against 80 to 100% of pairs and the dollar is going up versus 80 to 100% of pairs, and both of them have more than average intensity for this time of the day, you kind of get this kind of a trend that just keeps going and going. That's why people use our software and our statistical tools. Oh. Okay, so here's the chart here, and especially after 9:30, you really wanted to look for some sells. You got a beautiful sell signal right here, and this I label trend trades with the triangle marks, and I have different colors on here now, so I know which of the many different trades are signaling it, so I can try to reduce some of the silly ones that show up that a human trader wouldn't take. You know, this is still relatively brand new, but I want to improve upon it. You know, so the trend trades are with the triangles, the counter trend trades are with the circles. Some circles happen in the middle of the range like this, and other ones happen really after big, long, drawn-out counter trend moves. But nonetheless, you know, 9:30, you knew the yen was already super strong. The euro became super weak. You have the sell signal right here. It breaks down, falls 15 pips. A nice little pullback right here. That one worked, and that one worked. And on a day like this, when it's clear that the euro is one of the weakest and the yen is one of the strongest, when you start getting counter trend trades, you probably want to skip the first one or two, draw your fibs on that wave, and then only when it gets down to the fib targets, really consider putting on a position. You can see when this was down between the first and second fib target, nice little wick, reversal wick. You get long right here, went up about 12 pips. Came down to the next one, we have another counter trend buy signal right at the 1.618. Goes up another 12 pips. You know, you're not expecting a huge reversal off of these levels, but for the most part, you can see when it gets to the fib areas, you start seeing some support, some bouncing. And if you get a signal like this and it doesn't work, typically it's going to go down to the next level. So, you know, redraw your chart off the last wave and then consider getting back in at the next fib target, which is right here. And you get in and you can see it went from 60 to 90, went up 30 pips. Now we also saw that the Swiss was extremely weak on all time frames, and for the most part the intensity of the down moves was much more than the few counter trend moves up. So strong dollar, weak Swiss, we want to buy the dollar Swiss. This has to download tick data, and then it will calculate the range bars and then the patterns. Alright, so looking at this, especially after 9:30, which was when the Swiss got really weak, you have this beautiful pattern right here, buy signal, and I'm going to try to make the higher probability signals be bigger and the lower probability ones smaller, but we'll also make this a little smaller so you can see some of the patterns that have disappeared off the chart. If you add 10% of the day's range padding to the top and bottom, you can see all the signals. And when I incorporate this into the daily Forex blog and classes, you're going to have a lot more information on how to use this. We're going to have support resistance areas on here. We're going to have our real-time momentum tools. And if this goes up and it goes sideways like this and you have a buy signal here, this does not use our momentum tools for many reasons. I want to have this be discretionary, and then you use support resistance. If the next resistance area is 20 pips up and you take this trade here and it's extremely strong using our momentum tools, you know, you want to take the trade. If it's going up, you get a buy signal here and it's not that strong, or the daily, weekly, monthly trend is down, you might want to pass on that trade. Or if there's resistance right above it, you might want to wait for that resistance to kind of be broken out and then get into the trend. And again, once it gets up here to an extreme level, you start getting some counter trend signals, and you can see most of them kind of stalled price. You know, this one here failed. Obviously, these signals are only to alert you of possible reversals. We're really waiting for, at the very minimum, for it to go 1 pip underneath those bars low to sell. And in this case, it didn't. Here you have another signal. Did it go underneath those bars low? Yes, it did. So you would be on this one. You could possibly get on this one. You'd have a loss. This one has another sell signal. It goes sideways. You'd have a loss. You get in again. This one pulled back about 15 pips. So the point is, small losses, bigger wins, and always draw your fibs. When you start getting some counter trend signals, draw your fibs on those. And it's usually a good idea to wait for the fib target. I've talked about Fibonacci profit targets probably for the last 6 years. I've done either live classes and for the last 6 months recorded classes. It's key. If you get into trades too soon, you know, your odds are a lot less. This is one of the stronger currencies today. So obviously, trying to sell the strongest currency is going to be really hard to do. Fib targets usually work, especially when you start getting these counter trend patterns. And you can see this one here. That went short, pulled back 20 pips. You only need 10 pips a day to double your account every 2 months. And again, at the beginning of a trend, this is a wonderful entry pattern right here. And it caught, if you missed the first move down here, we pretty much nailed the low. And if you missed the first wave up, it also got you in on this one as well. Now the Swiss was weak, the yen was strong, so you can also sell the Swiss yen. This will come up in a second. Has to download tick data, and it's going to calculate the signals and put them on your chart. So again, you're looking to sell this one. This trade right here didn't really work. If you got into a trade right here, you lost about 7 pips. You got short right here, you made 10, 20, 30, 40 pips. If you got short right here, you can see it went your way, then came back up. Your stop's always above the swing high. It never stopped you out, and then it fell 30 pips. And here's your first counter trend buy signal. And this showed up basically because of how long it's gone down for about 2 hours, pretty much straight down. And a lot of times, especially on non-super strong trend days like this, that's the end of the move. So you can draw your fib on that level. If you took a trade right here and lost, wait for it to come to the fib target, and you can see if you lost 10 pips there, you got your loss back. If you took this trade right here, you might have made a few more pips. And there's no bounces from these areas, so your better bet, if you are going to be looking for the next buy signal, draw your fibs on this last wave, and look at this entry right here, and you can see it went up 30 pips. So if you have a little bit of patience and an ounce of common sense, this tool is really going to help you spot signals, especially when you rank them using our currency meter, our quote sheet or hot list. And you'll see your strongest currencies on one monitor, the weakest ones on another. Wait for the signals, and then wait for price to go above or below that signal bars high or low by 1 pip. Get in, use our trailing stop, use fib targets to exit, and that's it. It can't be any easier than this. And over time, if you're a new trader, you can watch the hundreds of videos we have on our site and learn support resistance, how to use fibs, and all the other stuff that we've taught over the years is in our classes, and it'll help you identify when one of these signals is more likely to work. For instance, if a currency has been down 4 days in a row and it's below the lower containment bands today and you start getting some counter trend signals, they're going to be very highly accurate, way over 60 or 70%, probably even 90% some days. So the more you know, the less stupid trades you take, the more smart trades you take, the bigger pip gains you'll get, and the better you do as a trader. So, but this will help you get started in trading relatively quickly and hopefully well, and then you can learn the more advanced stuff over the next 6 months to a few years as you trade.